As tempting as it may be to delve into the world of sensationalism and speculation, it's crucial to approach the topic of investing with a balanced and rational perspective. While some might argue that stacking cocaine could potentially yield higher returns compared to stacking gold, it's essential to consider the myriad of factors that influence such an assertion. First and foremost, let's address the elephant in the room, the legality and ethical implications of investing in cocaine. Cocaine is a highly regulated and illicit substance in most parts of the world, with severe legal consequences for possession, distribution, and trafficking. Engaging in such activities not only carries legal risks, but also ethical concerns, including supporting criminal enterprises and contributing to the societal harm associated with drug abuse and addiction. From a moral standpoint, any potential financial gains must be weighed against the human cost and societal impact of the drug trade. From a purely financial perspective, comparing cocaine to gold as an investment is akin to comparing apples to oranges. Gold, a tangible asset with intrinsic value, has served as a store of wealth for millennia. Its scarcity, durability, and universal acceptance make it a popular choice for investors seeking to preserve capital and hedge against inflation. In contrast, cocaine is a perishable commodity subject to supply chain disruptions, legal crackdowns, and fluctuating demand influenced by numerous factors, including geopolitical events, law enforcement efforts, and changing social attitudes. Let's compare 10 pros of investing in apples and oranges. Pro Gold Points 1. Historical stability. Gold has been a reliable store of value for centuries, with a track record of preserving wealth through various economic cycles and geopolitical upheavals. 2. Universal acceptance. Gold is recognized and accepted as a form of currency worldwide, making it highly liquid and easily convertible into cash or other assets without loss of value. 3. Diversification benefits. Gold serves as a hedge against inflation and currency depreciation, providing diversification benefits for investment portfolios and reducing overall risk. 4. Tangible asset. Unlike financial instruments or digital assets, gold is a tangible asset with intrinsic value, offering a sense of security and permanence to investors. 5. Limited supply. The supply of gold is finite, with new discoveries becoming increasingly rare and expensive to extract, which helps maintain its scarcity and value over time. 6. Portfolio insurance. Gold acts as a form of insurance against systemic risks, geopolitical uncertainties, and financial market volatility, providing stability during times of crisis. 7. Long-term preservation of wealth. Gold has demonstrated its ability to preserve purchasing power over the long term, outperforming fiat currencies and other assets as a store of wealth. 8. Lack of default risk. Unlike bonds or stocks, which carry default risk associated with the issuer's solvency, gold has no counterparty risk, making it a reliable asset in times of financial distress. 9. Intrinsic value. Gold possesses inherent qualities such as scarcity, durability, and divisibility that contribute to its enduring value, independent of market sentiment or economic conditions. 10. Cultural significance. Gold holds cultural and symbolic significance across civilizations, serving as a symbol of wealth, power, and prestige, which further enhances its appeal and demand. Pro Coke points. 1. Potential for higher returns. Historically, the black market price of cocaine per gram has often exceeded the market price of gold, suggesting the potential for greater returns on investment. 2. Rapid appreciation. Cocaine prices can experience rapid spikes due to fluctuations in demand, supply chain disruptions, or geopolitical events, offering the possibility of quick profits. 3. Diversification. Investing in cocaine could provide diversification benefits for portfolios, particularly for individuals seeking non-traditional assets with low correlation to mainstream markets. 4. Portability. Cocaine's high value-to-weight ratio makes it easy to transport and conceal, offering advantages in terms of portability compared to bulkier assets like gold. 5. Lack of government regulation. Unlike gold, which is subject to government oversight and taxation, investing in cocaine operates outside of legal frameworks, potentially avoiding regulatory burdens and taxation. 6. Demand resilience. Despite efforts to curb drug use, demand for cocaine has remained resilient, particularly in certain demographics and regions, suggesting a relatively stable market for investors. 7. Potential for market arbitrage. Discrepancies in cocaine prices across different regions or markets could present opportunities for arbitrage and profit generation for savvy investors. 8. Inelastic demand. Cocaine is often considered a luxury or status symbol, leading to relatively inelastic demand even in the face of price increases, which could contribute to price stability and profitability. 9. Lack of counterparty risk. Unlike financial assets that depend on the solvency of counterparties, investing in cocaine involves direct ownership of a physical commodity, eliminating counterparty risk. 10. Alternative store of value. In environments with hyperinflation or currency devaluation, cocaine could serve as an alternative store of value, preserving purchasing power in the face of economic uncertainty. While it's true that the price of cocaine on the black market can be significantly higher than that of gold on a per-gram basis, the illicit nature of the drug trade introduces significant risks and uncertainties. Investing in cocaine entails navigating a shadowy and volatile market fraught with dangers ranging from legal repercussions to violence and exploitation. Moreover, unlike gold, which can be stored indefinitely without depreciation, cocaine degrades over time, further complicating its suitability as an investment. Furthermore, the notion of stacking cocaine implies accumulating large quantities of the drug, which not only amplifies the legal and ethical risks, but also exposes investors to heightened volatility and potential losses. Unlike gold, which enjoys relative stability and liquidity in global markets, the value of cocaine is highly susceptible to supply and demand dynamics, regulatory crackdowns, and law enforcement interventions. A single bust or disruption in the supply chain can wipe out entire investments in the blink of an eye. It's also essential to consider the broader implications of promoting the idea of investing in illegal substances, encouraging individuals to view cocaine or any other illicit drug as a viable investment undermines efforts to combat drug abuse and addiction, perpetuating a cycle of harm and exploitation. Responsible investing entails considering not only the financial returns, but also the ethical and social ramifications of one's actions. In conclusion, while the allure of quick profits may tempt some to consider stacking cocaine as an investment strategy, the inherent risks, legal consequences, and ethical considerations far outweigh any potential financial gains. Gold, with its time-tested stability and universal acceptance, remains a far more prudent choice for investors seeking to preserve wealth and mitigate risk in an uncertain world. When it comes to investing, it's essential to prioritize sound judgment, ethical principles, and responsible stewardship of resources over short-term speculation and sensationalism. Thank you for watching this very important video. Be sure to like this video and please subscribe to the channel to help us grow.